Hello and a warm welcome to my channel. Ask me a stock and I'll cover it to you for your from a medium to short to long term perspective based on the studies of Ichimoku, which is a Japanese-based multi-time frame analysis, and harmonic trading patterns derived out of Fibonacci. So if you would like me to cover a stock for you, do mention it in the comment section and I'll take it up. But please do note that it should be from the large, mid, or small cap segment, no micro cap stocks, please. Now, a disclaimer, this is not a trading or investing advice to you. This is purely an educational talk on the basis of Ichimoku and harmonic trading patterns. Before you take a final decision on trading or investing in the stock, kindly do your study thoroughly. Please also note that not a single rupee or fee has been charged for this particular analysis. Now, today's stock is Star Cement. Star Cement is the India's largest cement manufacturing company in the northeast of India, with a market share there of approx 24%. They hold out there. They also are the promoters, are also the promoting company holders of Century Plywood, which is India's leading manufacturer and supplier of plywood. Apart from the management in the public holdings, Ultratech Cement also holds the 8.4% share in the company. The company came out with its quarter 4 2024-25 results, which were a mixed bag, because while on one side there was a tremendous jump in revenue by 40% year on year, and with announcements of new capacity expansion at their Meghalaya and Assam plants, the company saw a major shrinkage in net profits. The standalone year on year has come down from a net profit of 220 crores to a loss of 158 crores, while the consolidated profit after tax fell by 43%. The company saw a raw material cost go up by 19% in the financial year. Now let's go and check out the stock charts and see what lies ahead for it. Now, in the monthly charts, we can see again, like most companies in the mid and small cap segment, 2018 till the pandemic low of 2020 was a decline phase, and this company took a little bit more time to come out of a strong breakout. As you can see out here, the breakout happened sometime in 2023, and ever since then, we've seen a very, very strong move in the stock from 115 to going to double it to 250 odd in a span of 1.5 to 2 years. So good performance post that, but prior to that, lengthy period of underperformance. The other thing worth noting is that the stock tends to do deeper corrections. The first move from 2020 pandemic low to 21 August saw a deeper correction of 62% Fibonacci, and the current one also from May 2024 till November 24 was also quite deep, 50% again out here. Now, interestingly, while the most of the stocks in the market were correcting in December, Jan, Feb, and March, this one was holding out pretty well during the last 2 quarters of the year, did pretty well out there. In the monthly, you can see a slanting trend line resistance out here, while the support for the stock is at 200 and then all the way down at 180. The resistance coming up at 240 and 250 for now. Let's have a look at the weekly and further analyze it. Now, before I go on to further analyze the stock, I'd like to inform you that my courses on harmonic trading patterns, Ichimoku, and trading psychology risk management are available. These are made into videos along with PDF, level-wise, chapter-wise, broken up into small videos, segments-wise, for both bullish and bearish scenarios. Both Ichimoku and harmonic patterns are available in Hindi and English, so you can select whichever one you want. Apart from that, I also have a bonus material that is for those who are completely new to trading or understanding charts. For them, there is an introduction to charts with a 3-hour detailed video again made into small chapters on candlestick theory. Now, trading psychology and risk management is an extremely important aspect if you want to be successful in trading. And most traders are either not aware of it or ignore it. And this is the reason why SEBI comes out with a report of 90% traders failing in market, because trading is more about discipline and risk management, less about analysis, which can be outsourced. Now, the course is extremely detailed and it has got bonus material also, which includes number one, various other technical studies and introduction to them on how do they go about it, which complement both harmonic trading patterns and Ichimoku. Number two, how to do a relative rotation of sectors, that is, which sectors are standing out strong or weak at any particular time you're analyzing, and accordingly, which stocks in those sectors are looking strong and weak. Number three, based on the market scenario when you wish to do a derivative trade, options trade, and your own risk profile at that moment, which option strategies will suit you, which ones you should go for. And finally, a sort of self-based analysis, a toolkit, which I will show you on how to regularly on your own analyze what is your strength, where you need to, completely make maximum advantage of, which is your weakness where you need to work, what are your opportunities to improvise on, and threats, areas in the market or segments or time frames which are not suiting you and which you should completely avoid. The link to the courses and the details is there in the description box. You can check them out. And if you have any doubts or queries, you can shoot out an email to me and I will get back to you on that. Now let's get back to analyzing the stock. Now, in the weekly time frame, interestingly, you can see, from 2023 when that major breakout occurred, it's never tested the cloud till November last year. Now, above the cloud, future Kumo is bullish and long flat line. But again, stock has gone more, in terms of movement, it is more sideways now than trending at the current moment. Too much of sideways way moving like this. So in the weekly, the current resistance is at 250. Now above 250, the stock starts moving up. Support is at 210 and 200 below that. Crucial 210, 200 support for any pullback. Let's have a look at the daily time frame. In the daily time frame, again, you can see the trend line rejection which took place couple of days back. Today was the result reaction because results came yesterday post market, and negative reaction. Like I said, profits down, operating, the raw material cost has gone up quite significantly. Now the daily support comes in at 220 and then out here at 210, so 220, 210, 220, 200 in the weekly. These are crucial levels of support you can see. And here also you can see stock was trying to do a higher low, breached it down, but overall another higher low out here, another higher low out here. So this 200, 210 is very, very crucial out here in the stock with in the daily time frame, a trend line breakout above 240 is possible. Now, in my reading of this stock, because it's a small mid-cap stock with just a 9,000 crore market cap, and I would be looking at something, one more interesting point of the stock is that once this stock started moving up, the monthly baseline testing, which has only happened one, saw a good bounce. Now, this is a sign of a good stock where in a higher time frame, it comes, tests the baseline, and then starts its uptrend again. Of course, it may not be V-shaped. It could take its time to do something like that. So my conclusion is that one should look for opportunities to accumulate up to 200 bucks out here with a stop loss at 180 on a weekly basis, if not monthly, because once that 180 level breaks in the stock, it can slip down to 160, could even come back to this level if this 180 level is not held. So 180 is my Lakshman Rekha out here for this stock. I will if weekly, if not a monthly basis, either of the two bases, one can look at it for tremendous weakness below that. Otherwise, 200, 220 is a good way to accumulate this stock monthly basis out here for upside, or one can wait for a breakout above the trend line. Candles started closing above the trend line at daily or weekly candles. Then you have the tremendous potential for upside in the stock all the way to minimum 300 in the short to medium term, and medium to long term would be looking at 350 to 400. So overall, not out of the woods yet, the stock trending, around the trend line. So one would should get aggressive only above the trend line, else look to accumulate nicely on the downside with a marked risk of 180 on a monthly closing basis. So I do hope this video is of help to you. So please do like it, share it, and do for regular stock and index ideas. Until then, all the best with your trading and happy investing.